Hey guys, this is Dawood with AutoMarketplace. Today we're joined by Gavrilov from Next Century Insurance. Thanks a lot for joining us, Gavriel.
Thank you, Dawood, for having me.
No, it's great. And so Gavriel, you're obviously going to go into your background. And so just from my side, I've been working with Gavriel, on my small fleet for the past 6.5 years. So I know Gavriel really well. Highly recommend him as an insurance broker. But Gavriel, do you just want to let's just start maybe from how you got into the industry. What is a TLC insurance
Sure.
brokerage to you? And then we'll start from there.
I got into this industry because my father still owns a black car business here in Brooklyn, New York. Pre 2001, the fleet had around 900 vehicles. It was probably one of the largest black car fleets in the industry. Post 2001, the numbers were between 300 to 500. I have worked dispatching. I worked as a driver when I was in college. I dispatched. I did sales, pretty much everything.
And so, like, when did you start Next Century? So basically, your dad had this kind of traditional black car base, which was, it was a fairly large one. It was called Concord Limo, which is really well known with a lot of people and has a good reputation. And so, when did you actually start Next Century, and like, how did you get into the insurance side of stuff?
So I started in 2013. I would say that's probably a year or two after Uber came into the New York marketplace. I understood that work will slowly disappear from the regular black car fleets and simply go to Uber or Lyft because it was just so much easier. There's so much less things for drivers, clients to do that. This was the only way to do transportation in New York City. And I saw the opportunity that there's going to be a drastic increase in drivers. So I decided to open up a brokerage in 2013.
No, that makes a lot of sense. And so I think one of the most difficult, and like we laugh about this, but it is a insurance is kind of a technical subject. And so one would say that, okay, I think a lot of people will say, like, why is insurance so expensive? Why are the rates going up? I guess maybe a great way to start this conversation is if you had to explain to a TLC driver or a TLC fleet, why do we have insurance? Like, what is that solving for, especially in New York City? Like, how do you put that in simplistic terms for like a driver?
In simplistic, in as simple as possible, insurance exists for the simple purpose of covering accidents or passengers suing the driver or the vehicle owner for damages. The limits in New York City, as everybody knows, are 100, 300. Those are fairly high limits, and there are a lot of claims. Just to jump into why the rates are what they are now or what they're becoming is we have to understand that the black car industry from what it was in the beginning of the 90s till today drastically evolved. So back in the 90s and the 2000s, pre-Uber, your average black car driver was doing 5 to 8 jobs a day. Those 5 to 8 jobs a day uh, made enough for them to go home. JFK to Westchester, 170, $180.
It was
New
more like a it
Jersey,
was more like a luxury service, like that
correct,
traditional like Carmel or Dial 7, or like it
right.
was a corporate client base. And when Uber and Lyft came, would you say it kind of became this hybrid? Like it started looking more like the yellow cab industry. Is that a fair way to put it?
Correct. So the classification of there always has been a classification of black cars and car services, but it took a lot of time for insurance companies to understand that a lot of this work that exists now is no longer your traditional black car. It's more car service. And the simplest way of explaining this is the number of trips per day. So back in the early 90s, in the early 2000s, before Uber, your average driver would do 6 to 8 jobs maximum a day. Now, if you look at the figures, if you look at the pickups and drop-offs, 6 to 8 jobs is done, I would probably assume, within an hour to an hour and a half on a good day. And that risk just continues to grow because obviously the more passengers you have, the more trips you're doing, the higher chances of you getting into an accident are.
I think that's the point you're making right now, I think is something that's so technical. Like it's technical, it's easy enough to understand, but it's fundamentally a very important point.
Correct.
Basically, you're saying, and I'm kind of repeating what you're saying, but you're saying like Black Car back in the day, pre-Uber, was kind of this more like luxury pre-arranged service. Even the risk itself is probably lesser because it's a more corporate client base. And fundamentally, Uber and Lyft insurance, although it was classified as a Black Car risk, eventually the insurance companies caught on to like, this is actually looking more like yellow cab risk, not like
Correct.
Black Car risk.
And if you want to take it even further back, we had, when Concord was still doing a good amount of work, we had a division that only did packages. You had no passenger involved. We had a call center that only dropped off packages, picked up packages, and even those were, I mean, you'll see packages of 100, 150, $200, and that doesn't even exist anymore. So that whole concept of transporting 8 passengers daily no longer exists. It's now 20, 30, 40 passengers. And that's obviously creating a larger risk for the insurance carrier. It's creating a larger risk for the driver. And that's why the rates have been climbing.
Now, the second question, that by the way, thanks a lot for that. I think that's going to actually be very helpful to a lot of people. Now, the second question you're going to be asked, I'm sure you unfortunately probably have to justify this question, is a lot of drivers will say, why do I need to deal with a broker? Like, you know, what's the point of dealing with the broker? How come I just can't deal with the insurance company directly? How do you kind of explain to them why a broker's needed, what you're actually doing? Because I think a lot of drivers say, well, he's earning his commission and then like it's, you know, he's on vacation. And that's, you know, how would you explain that to someone, like the role of a broker and why it's needed?
So the role of a broker and why it's needed, I think the clearest way of explaining it to drivers is we do 90% of the work for the insurance carrier. We manage the claims, we fill out the MV-104s, we do the driver changes, we do the vehicle transfers. And when somebody says, hey, listen, I need a vehicle transfer done, I'm at the dealership, it's slightly more complex than copying and pasting a VIN number into a screen. There are forms that need to be filled out. There are old registrations that need to be submitted. There are motor vehicle records that have abstracts from different states that need to be showed in order to meet the criteria that the actual insurance company is requesting from us. So, for example, we're in February 4th now. Somebody's trying to do a driver change. Oh, why can't I get it now? Well, you have to understand that there's 3,000 other driver changes being processed in American Transit. And their underlying guidelines are that they have to review it, they have to see the abstract, they have to see the motor vehicle record, they need to see if there are previous claims. And this is all done in the form of forms. So there's a lot more that goes into a policy than just selling it on March 1st and forgetting about it for the rest of the year. So we're pretty much doing that work for the insurance company.
And then you're also doing, for example, you're doing claims as well. Like if a claim arises, you have to be the interface of that. And so I think that's what you just said is really important. And it kind of leads us to the next question, is another question many drivers and probably people from the outside who might not know the industry well, they might say like, well, if there's only 2 or 3 companies, maybe that's question number one is, in your perspective, why are there only 2 or 3 or 4 companies, just a handful of companies, and why aren't the Geico and State Farms of the world involved in this industry? And so I guess that let's start out with that question. How would in your understanding, how would you explain why there are like 3 to 4 companies a driver can deal with, or a fleet for that matter?
Let's put it this way. If you can make it in New York, you can make it anywhere. And the companies that have made it in New York are the ones that are existent today. Though there have been a few that have fallen off, but the larger ones that have provided TLC insurance in New York are here today for the specific reason that, one, they are able to manage the claims. Two, they underwrite, or in terms that a driver would understand, is they look at the policy not only by looking at a motor vehicle record, they look deeper into the driver's history, into the driver's earnings, into the driver's ratings with Uber or Lyft, and that plays a huge difference to them in the rating. So a lot of that stuff has developed through the years simply because looking at a motor vehicle record of somebody doesn't give you an accurate rate anymore. Looking at a motor vehicle record of a corporation that has, I don't know, let's say 10 unlisted drivers, that doesn't help them anymore. So the companies that exist today have done a better job of underwriting, have implemented other things that do not make your life easier or my life easier, but this is what they have to do in order to survive in the market today.
And just on that point, and we'll try, is that a lot of people might not realize this. Since 2013, in terms of the insurance business, you have actually seen and we don't have to name names, but you've actually seen insurance companies come and go. You know, there've been names that have come and gone. So I think some drivers might not appreciate that. So in this market, so now a follow-on question to that is, if there are only 2 or 3 companies that have kind of managed this marketplace, what is the difference between dealing with Next Century versus dealing with TLC insurance broker A, TLC insurance broker B? Like let's say a driver would ask you that, what's kind of your pitch to them? Like, you know, if everybody's offering the same thing, I mean, that I'm kind of simplifying it, but how would you say, well, you know, this is our value proposition at Next Century, or this is how the brokers differentiate themselves?
So, to be as honest as I can, since there's only 3 companies, we are all selling the same product. I cannot tell you that my product is any different than this product or this product. It's the same product. If everybody's selling the same product, the only thing that you could make yourself different in is the type of service you offer. So if you offer somebody that speaks Russian, Polish, English, Spanish, Chinese, that obviously helps the community, it helps the drivers. If you offer them help with third-party claims, drivers don't want to buy full coverage. They take the risk, they get into an accident. The driver has no idea what to do. We offer claim handling. We do everything we can to help the driver. So that's my selling point. I'm here daily.
Yeah. I think that's a super honest answer, and I think it's a good answer. And honestly, it kind of applies it, to be fair to you, like it's like me asking an Allstate and a Geico insurance broker, like, what's the difference between Geico and Allstate? And I think what you're saying is true. It's like the insurance is the insurance, you're going to be covered, but it's about the, you know, customer service. And in many ways, so many businesses can be kind of summarized like that, where you're selling the same product, and it's and that's the difference. Now, in terms of like getting into a bit of the technicalities, because it's renewal season in the TLC world, what are you seeing broadly? Obviously, it's going to differentiate between the person and the driver in terms of rate increases, like just generally on the liability side for individual people. What are you seeing amongst the 3 companies right now?
So there are rate increases. I think that everybody is aware of that now. I'm hoping they are. It's February 4th, and if you're not aware, you can give us a call and we'll tell you that. But yes, there are rate increases. The rate increases are determined from the base rate. So if you've had no points, no accidents, and your vehicle is brand new, your rate still will go up simply because the base rate of insurance went up. Then you have the tag-alongs, the point surcharges, the old vehicle surcharges, the non-MVR accidents that are being applied. So yes, the rates did go up. There's a lot more claims going on now than back in the day, and that's what the insurance companies are doing.
And what sort of claims are you, just to double click on that, what sort of claims are common that you see? Like what are, I know it's a very broad question, but like what are things you often see that a lot of drivers might not appreciate? Like what type of claims are occurring?
So I'm not going to speak about the regular claims because the regular claims, cars on cars, happen every single day. The claims that are killing the industry, that are killing the drivers, that are killing the claims at these insurance companies are the pedestrians and the bikes and the motorcycles and the mopeds, however you want to classify them. New York has unfortunately developed into a city where we're restricting the car flow by allowing more pedestrians and more bikes to operate in some sense illegally, and this is causing more and more accidents. And out of, I want to say, 10 pedestrian or bike accidents, the driver is not at fault.
Oh, that's really okay. That's actually really interesting. So it's actually the other
There,
party might be at fault.
the other party might be at fault. There's different cases where the passenger opened the door and he hit a bicyclist. What could the driver have done?
That's a
Right?
super fair point. Yeah.
There's ones where I saw one today where the gentleman was driving on 4th Avenue in Brooklyn, making a left onto 38th, 36th Street next to us, and a moped delivering food just came out from nowhere and crashed into him. Those are the claims, and those are the accidents that are killing the industry, putting a burden on the driver. Unfortunately, New York is a no-fault state. There's a handful of lawyers that specifically target claims against Uber and Lyft drivers, and they're out there to catch this type of stuff and to take the insurance company on a ride for whatever amount of money they can. That's one of the things that's causing the industry to have an increase. And obviously, if you just take into account regular car and car accidents, prices for vehicle parts increased, car values increased,
It's basically like
repairs,
it's like a
everything.
perfect storm almost in like in auto
Correct.
insurance and in TLC world. And there was actually a point that we spoke about that I wanted to bring up, and I think you also mentioned that's important to bring up, is that March 1st is usually the renewal the renewal date for a lot of insurance policies. And you're saying that ahead of March 1st, a lot of people might not appreciate that many vehicles or drivers will not meet any underwriting guidelines. So basically, Hereford, American Transit, or Maya, or Insured, they might not even say we'll underwrite insurance for this. Is that the way to think about it, or how would you
I
think about
I
it?
think that's the way you said it is 100% correct. There's a handful of individuals, of fleets that are not going to be able to obtain insurance before March 1st. If you look at the drivers first, if you're licensed in the US under 1 year, that will be difficult to do, if not impossible. If you've had a pedestrian accident or a bike accident in the last 36 or 40 months, the chances of you being able to get insurance at a cost that makes sense in today's world is going to be very difficult. Then you have to look at the loss runs, which are a basic document the insurance company gives you, showing how much was paid out on a claim pertaining to that policy. If those loss runs exceed a certain amount, you will be declined from every single insurance company. So those are the things that a lot of people are not taking into account. So when your rate has increased by 100, 200, 300, $400 a year, you have to take into account that the reason why it did is because the claims exceed the amount of money the insurance company is collecting. And I think the best simple way of explaining that is, if, I don't know, you buy a bag of 10 apples for $1 each, you spent $10 on that bag of apples. You then go and sell those apples for 10 cents and you get $1 back. So you lost $9. So a driver that purchased a policy for $3,000, God forbid, gets into a bike accident, and that Bicyclist wins $90,000, you pay $3,000 in insurance. The insurance company paid out $90,000 in claims. That's why prices are going up.
And in terms of like this renewal season, how many people, like as a percentage in your book, because you run a pretty large book, so you know it's probably a good proxy like for the rest of the industry. Are you seeing that more now where a driver's coming to you and either the policy is like, you know, very expensive and it's almost prohibitively expensive, or B, they actually are not getting insured? Like what percentage are running into that problem? Is it like 10% of the book, 5% of the book, less than that?
I mean, I would say out of 10 drivers, 9 are getting approved for obviously higher rates, and then 1 is getting denied. And again, the you have to understand that the larger brokers work with all the companies, and if you're denied at one broker, you're not going to be accepted at.
Yeah,
In my
that's a
office,
very
it's
important point to make.
so it doesn't matter how good of a service I can offer the
Yeah.
driver if and in all due respect to other brokers, if I have somebody and they're denied with me, they would be denied with the other broker and vice versa. That's just
And how
how
does
the
that like
industry is.
what is like how expensive? I know like I know there's only so much you can speak about numbers because it's like not that you can't speak about it, but it's so diverse in terms of like what people pay. But in terms of like that all other rate, can you give drivers a sense of like how high what's the highest liability policy you've seen, for example? Like what do those numbers look like at this point?
So at this point, a bike or a pedestrian accident that has uh, a drastic payout on the existing claim will cost you between $9,000 to $14,000 a year just because of that pedestrian or bike accident.
And that's on liability only. That's
That's
not a
only
full
on
coverage.
liability only, correct?
And then have you ever experienced like someone or let's say an individual who can't get insured by any insurance company? Have you ever seen an like a New York State fund rate, if that makes sense, like where it goes to that like all
Correct.
other insurance company? What do the rates look? Have you ever
Right.
seen a rate like that from
Uh,
that company?
so New York State pretty much offers something called the New York Automobile Plan, which is for individuals who cannot obtain any type of insurance. There's an automobile plan which generates a rate uh, based on New York State. And then that rate gets thrown into a system, and one of the insurance carriers has to pick that rate up as part of this program, and they're mandated to be in it, I believe. So yes, we ran one. It was $48,000 a
Okay,
year, and
just crazy. Okay.
it doesn't make sense for anybody to have that or to pay that.
And so getting to rates, like I think we have a lot of, you know, guys who subscribe to AutoMarketplace who are in the fleet business. I think a lot of people know this now that there's a difference between individual policies and fleet policies, and fleet policies tend to be more expensive. How would you explain that to those fleet owners? Why are fleet policies generally more expensive, or what's your perception of why that is?
So that's a very good question. And I think the reason why that's a very good question is because there's a shift in that particular industry. Um, so there's an industry inside an industry inside an industry, and there's a huge shift. So the reason why the prices for fleets are increasing now is because the amount of losses paid in the last 3 to 6 years is a lot. The reason why the losses are high and there's a lot being paid out is because these fleets had vehicle rentals, meaning that you had 10 cars standing on the lot. Guy came in, rented the car on a weekly basis. The fleet owner forgot to list the driver. The driver wasn't accepted. The driver told the fleet owner they'll pay $100 more. He knows that he can't get insurance somewhere. So this all came together and created a bubble in which the insurance carriers are now paying out claims. The industry now shifted to something called plate rentals, which technically has no overhead on the fleet owner. The person that owns the vehicle, the driver, registers their vehicle with the fleet manager, and the fleet manager simply rents out their plates on a weekly basis or whatever the contract states. And I have a lot of fleet owners that come to me. They're like, "Hey, look, all we do is rent out plates. Our loss runs should be clean." You're 100% right. It's a completely new ball game. Your loss runs will be clean, but those claims that you've had in the last 3, 4, 5 years, they're only being settled now. They're only being paid out now, and that's why for the rates to become back to what they were, or to some kind of normal rate, you'll have to demonstrate that plate rental for a certain amount of time for the insurance companies to see it.
And you're basically, that's such a good point. Like with this plate rental business, and even with my own fleet, I've gotten into that because a lot of drivers prefer that, especially if they have their own car pre-existing. It doesn't force them. It's kind of similar to like a taxi medallion driver-owned vehicle situation. But you're basically saying that essentially if a fleet owner is doing a plate rental, that's like individual risk. That policy should be priced as it's like an individual driver risk, but it's still being priced as fleet risk because of previous loss runs. And then there was a second point you made where even a fleet that is renting a car and their, the full package, like the car insurance, the plate, everything, they're not actually, they're like, if a driver leaves them and then the previous driver had a really good insurance record and a new driver comes on who has a higher insurance, to save money, some of those fleets might leave the previous driver on. Then the new driver gets in an accident, and then it's it's like the person who's getting into the accident is not even on the policy. That's kind of also a dynamic?
Correct. So the dynamic that you just said is probably the largest dynamic that these insurance companies are seeing, because you were paying premium on a lower driver when the driver that got into the accident, from the police report, the insurance company is going to run this guy's motor vehicle record. They're going to say, hey, he had, for example, 10 points. He was at a larger risk of getting into an accident, and he did get into an accident, and we didn't get our premium for that particular policy. So that's a very strong and valid point, and that's also what's happening in the industry. And unfortunately,
is that criminal by the way, or is like hard to discern whether that, you know what I'm saying? Like basically what you're saying is that if a fleet owner is kind of gaming that system out where it's like, well, no one's ever going to find out about this, and then obviously an accident happens, as it always does, can the insurance companies say, like, you know what, we're not insuring you anymore because, this is the third time this has happened?
Yes, there's corporations that have had numerous undisclosed driver claims, and there's certain insurance carriers that once you meet that threshold of too many undisclosed driver claims, they will not take you, simply because they understand that you're not listing the correct driver and they're not receiving the correct amount of premium for the driver that should have been listed.
Yeah. And I think it's important for the fleets who listen to this podcast, and I think you're making a very honest point and a good point, is that some of those guys, if you're doing it by mistake, okay, that's fine, be more careful. But if anybody's doing this on purpose, that's actually hurting the entire industry in reality.
Of course, everybody's getting hurt. And Dawood, I've been dealing with you for 6 years. You have never had an undisclosed driver claim, and your rates are drastically lower than the individuals or corporations that have had undisclosed driver claims. And again, that's done by not my office, because if I receive the driver change, we have a system which manages it. We have a system that tracks it. We have a system that tells us which driver is listed, is not listed. So the transparency needs to come from the fleet owners, and these are rough times for everybody. And collectively, if everybody's on the same page, then within a year or two, this should not be an issue for anybody.
Yeah, and I think it's just important that you mention this. It's not like something that they're like, why are they talking? I'm sure some fleet owners are like, why are they talking about this? But I think it's important for them to hear that they do need to run a proper business, because eventually that actually is impacting drivers, fleets who are following the rules, and all of that stuff. And then the second point is that I'm increasingly hearing that insurance companies don't want to underwrite anybody under the age of 25. Would you say it's kind of being under 25 is kind of a
Uh,
difficult thing now?
for liability purposes, there haven't been any new age restrictions for physical damage and full coverage. There have. For liability insurance, if you have your DMV license in United States over 3 years, there have not been any changes to that. There are surcharges for having your USA license under 3 years and over 1 year, and there's now surcharges that if you have your TLC license under 1 year, the insurance company still rates it as inexperience because you haven't experienced driving an Uber or Lyft or any type of for hire vehicle in New York.
So like a driver who has, let's say a driver who's like 22, 23 years old, he just got his TLC license, maybe his DMV is less than a year. They should, just so if they're listening to this because they're just starting on the industry, their rate might be double or, more than, or, something like that versus an experienced driver. Is that a way to put it? There's a significant
Of course. Yes,
increase versus someone who's experienced.
Yeah, so if you have a DMV license under 1 year or under 2 years in USA, yes, there's going to be a drastic change in premium, or it might be just denied because they have to. If the driver is going to be placed on a corporate policy, and that corporate policy has had too many claims, they're going to say no, we don't want somebody with this age or not these qualifications driving this vehicle.
Oh, no, that makes a lot of sense. And so now we're going to shift into a topic that everybody loves to talk about all the time, EVs and TLC plates and, this topic of, all of this. So I'll approach it like this. What did you make of the TLCs releasing EVs? Because I think a lot, like, okay, obviously fleet owners who had value and who were basing their business on a perceived value of a TLC plate were extremely upset by that. And on a secondary and primary basis, maybe a taxi owner would be upset. So then now a lot of drivers, kind of that hysteria has calmed down. They're like, you know what, who's behind this? The insurance brokers were behind this because, they get to have more policies. What was your perception? Number one, how do you answer that criticism? And number two, what do you think about EVs as it relates to insurance and as it relates to whether it benefits your business or not?
Okay, so I'll start with the first part. It was done spontaneously, it was done irresponsibly, and if it was done properly, like any other state or city of this size in the world would have done it, I think the chaos and confusion would have been eliminated. It was very spontaneous. The insurance companies were not aware of it. The insurance brokers were not aware of it. Nobody was aware of it. It was done without any approval by anybody. Did it help out drivers who were in plate rentals or fleets in the long run? I'm going to have to answer that question as saying no. I see change as in this industry as being something that is not good. So the change that happened with these EVs is going to be a similar change down the road, or actually not down the road. I think it's going to happen very soon, and I'll explain to you quickly what I mean. Look, somebody that has worked 12 hours at Goldman Sachs and lives in Norwalk, Connecticut, unfortunately is not going to get into your car when you have 30% battery left and he just put 12 hours into work and now you got to stop for an hour, 2 hours to charge. As good or bad as that may seem, it's going to come to a point where Uber and Lyft are going to say, hey, we will take the electric vehicles. They are making the city cleaner and better, but you're going to be limited to airports. You're going to be inside the 5 boroughs, and the gas vehicles that are able to travel a longer distance will slowly evolve into doing longer and more profitable jobs. And I think that'll take some time for it to happen. I've spoken to numerous fleet owners that don't believe this, but I do stand behind my thought because I've seen it and I know that's how corporate America works. There's people that put in 18 hours a day. And the reason why they're sitting in your Uber is because it's a liability for the employer to send you home on the bus or train after you did overtime. So you have to understand that the liability now is on the employer. So you're going home to Westchester. You're going to get into an EV. He's going to stop and park. You're going to sit in the car for 40, 50 minutes. That's not something that's going to work on the Uber or Lyft platform. And I've said that to a lot of people. I've said that to you. I think that there's going to be a different classification of these Uber and Lyft drivers that are EVs, and they're going to be only able to do work within a certain distance.
No,
At the end of
I
the,
think that's so interesting. It's an interesting point that you're making, and I think it's particularly relevant that you're making it because of your experience seeing Concord Limo. So you actually
correct.
understand how corporations function, how they divvy out work, and it's not Uber obviously understands that as well. But I think you're kind of right until the range gets longer and until the charging infrastructure gets faster and bigger. And then the second point is that there's a lot of small, and this relates to the like, is this good for the broker point? Where, okay, if you get 10,000 more new EV policies for brokers to go after, what I'm seeing and I'm predicting, and it's not like, I think some drivers will say, yeah, well, damn those leasing and I'm sure some are definitely not the greatest in terms of customer service and abusive, and they should be called out. But basically, some of them, because this happened all of a sudden, they're going to go out of business probably. And so then those policies will drop off. So net, I don't even know how big of a gain this is. Now, do you have any small, I'm asking a hugely long-winded question.
If I can stop you there for a
Yeah.
second, the I've seen numerous individuals that were not able to obtain financing for a electric vehicle, but the fleet themselves had a plate available, and they gave that individual that plate to put on their electric vehicle. So to say that the electrical vehicle market is going to completely kill the leasing companies and the fleets who do plate rentals, I do not see that happening. I am a pessimist, and I don't see that happening. Unfortunately, this happened when we were going into renewal season. This happened into January, and anybody that's been in this industry and in this business knows that January is dead. So
So for that's actually, I think a lot of smaller fleet owners. I mean, I think I lucked out in a way because I focused on a niche, like, and I have a much smaller fleet how I started out. But let's say you have a customer who might have 100, like a fleet, like a mom and pop fleet owner. I think a lot of times people think like Hertz is the only, there's a lot of these fleets are mom and pop operators. A lot of them are privately messaging me like, I don't know if I'm going to survive this time. I'm not sure if I'm going to make it through. So what you're saying to them is like, right now, like, it's chaotic, but long term, you think it should be fine. Is that what you're kind of saying?
I listen. There's panic in every single industry. There's uncertainty in everything, and I think the cause of stress and the cause of panic within fleet owners and people that are renting plates or vehicles is this happened so spontaneously. One, two, it happened without any regulatory approval. Uh, Three, no insurance companies weren't ready for it. The drivers weren't ready for it. The nobody was ready for it, and it came at a time where you have to pay a deposit on your insurance. You have to go into it with uncertainty, and it's a dead month for everybody because a lot of people are still away. So my opinion is I am hoping that February and March, when work picks up, I think that the fleet owners, the individuals, everybody's going to be fine. I believe that New York is still New York, and that the 90,000 to 105,000 vehicles on the road will have work, and the wheels will be spinning, and drivers will be making money.
Now, I think a lot of small fleet owners, because I know a lot of them, a lot of them, I think that's like a nice thing for you to say. And I know it's tough for a lot of them. And I think also it might be a lesson for some of them, not all of them, to maybe improve their customer service or be more communicative. But at the same time, I think a lot of drivers, and this is such an unpopular topic to talk about, but I think there's always another side. I think and this is coming from me, I don't want to get you in trouble, like when they're termed as predatory and things like that. I don't think a lot of people understand, like you're seeing the claims, right? You're seeing that, okay, this
Right.
guy rented a car to someone and then this guy left it on the side of the road. And it's like, that's the guy who's complaining about the leasing company being predatory when he's driving like a maniac and hitting people on bicycles and stuff like
Of
that.
course.
And
Um,
yeah,
so just to fill in on that, yes, there's unfortunately the larger fleets um, have power in the TLC community, and the mom and pop ones and the ones that have a good sized business do not, and they're the ones that get hurt. And they have no intention of hurting anybody else. They're there to serve the community. They're there to give vehicles for rent to people that cannot qualify for financing. They're there to rent out plates for people that can't obtain TLC plates. So they're not doing harm to anybody, but they are being harmed in a very malicious way by people that take advantage of it. And that, again, that happens in every
and
single industry.
the thing why it's important coming from you is that you see the claims. You know,
Of
one thing is
course.
just to say it generally, but you actually see the claims from
Yeah, of
those
course.
rentals. And the second point you mentioned is fundamentally a leasing industry exists because, like you said, a driver can't get a loan, or a driver, they don't qualify, their credit score is not good. But on the EV thing, let's say an individual driver that, they're a good driver, they got the opportunity to get a TLC plate. So that's a good thing. I'm not saying that's all negative. I want to talk about full coverage for EVs for those guys. So there's a lot of guys, and there was this one company I wrote an article. We wrote an article, AutoMarketplace, on Transit General, a new company that came and then came out. If there's a lot of drivers out there who have these Teslas and other Cadillac EVs, very expensive, they can't obtain full coverage. What's your advice to them? Or what companies are offering full coverage, and can you facilitate that?
So yes, we can facilitate it. The underwriting is strict. It's not cheap. It does exist. The New York State admitted insurance companies, what I mean by New York State admitted is the insurance companies that follow New York State rules for insurance, currently do not cover any type of Tesla. So in other words, the best insurance company in New York State that does physical damage, that does full coverage, they will not underwrite a Tesla of any sort, regardless of year, make, model. I'm sorry, year, model of the Tesla, or whether it's new, old. If it's worth $5,000 or $30,000, it doesn't matter. They will not underwrite it. They will not underwrite it simply because it's too much to fix. It's too expensive, and they will not do it.
And
They
I want to like, what is the difference, if you want to explain to a driver, between an admitted carrier in New York and a non-admitted, like a Transit General or a Adriatic, or how would you explain that to someone?
I think the easiest way is one company abides by New York State and their laws of formulating an insurance company, and the other does not. But it still caters to the needs of the drivers, and for insurance purposes, they still pay out claims. Probably not in the best way possible, but they still exist, and they still provide insurance services here in New York.
And the way I think about that non-admitted admitted, like let's say Transit General, and by the way, Transit General might be a great company. I don't know anything about them, but they're not admitted in New York. Potentially, it seems like that. But the risk to that, a lot of people don't think about this risk where, let's say an accident happens and then Transit General like goes out of business. Like it's saying, well, we're not going to play. Is that kind of the risk someone is taking on with a non-admitted carrier?
Yes, that's the risk you're taking on. You're also taking on the risk of understanding that you're purchasing a policy that may potentially pay out less than what you have expected, simply because they're not registered to, or they're not a New York State admitted insurance company. So their laws and their regulations are simply whatever they set inside the company. They're not. It's
That's
not
such a, I
overlooked
just
by
want
New
to
York
drive
State.
that point home. So if there's a TLC Tesla driver, he just got his Model Y and he got a Transit General policy. I think Transit General not even underwriting physical damage anymore, but let's say he got a Transit General policy. What you're saying is there is a risk that they may not cover the claim as much as they want, and that's something they have to think about. It's not a comment on Transit General, it's more like those are the facts, like they have to think about
Correct. Those are the facts, and that's something that individuals did not take into account when they purchase these vehicles. And when you have a $60,000 car note to the bank, and you wake up in the morning and there's a tree, or the car's stolen, or it's damaged, or there's no coverage, you will have to replace whatever you need to do with that car from your own pocket. And that's look, Kingston Insurance has been in the business for, you and I both know, what is it, 100, 120 years?
Yeah.
There's a reason why they don't underwrite it. And the reason is
Yeah.
because they can't make money on it. So there's a reason why another non-admitted insurance company will underwrite it for a lot more money and not be admitted in New York. So
if let's say a driver understands that non-admitted versus admitted risk, is there any company non-admitted who is willing to underwrite because Tesla is the most popular model, willing to underwrite Teslas right now that you partner with, and so someone can reach out to you to
yes,
for that
and
policy?
yes, there is, and they don't even want to underwrite it. They want the payment first. And the underwriting premium is 12%. So $50,000 car, 12% off the bat. That is your yearly premium. So that'll put you in the around $5,500 to $6,000 a year range, on top of your liability payments, on top of your
And what's the
payment to the
deductible
bank.
look? What is the deductible look on that
The
policy?
deductible's $2,500, and they will only cover the vehicle owner. They will not cover anybody else. So God forbid you purchase a policy, your friend is driving with you, you come out of the car to fill up the gas, you guys switch drivers, your friend drives away, gets into an accident, not covered.
Okay, wow. Okay. So and then another question people ask us, is there any gap policy, gap insurance for people who don't know? Obviously, you know this, Gavriel, like if the loan is if the car is underwater on the loan, like a product that fills that in. Do you know of anybody who offers that
No,
product in TLC?
no, nobody in TLC has ever offered anything along those lines. Unfortunately, I know that the banks sometimes do it, but I believe that once they get a copy of your registration and they see that it's a commercial vehicle, even if you paid for that coverage, they most likely would deny it.
Got it. Okay. And now as we kind of come to the end here, is that on comprehensive collision, what percentage of your because this is like something that it drives me crazy, because it's like, how come no one talks about this subject, that people have car loans and then they don't have the proper insurance? Roughly what percent of your book would you say do people actually buy comp and collision? Like if you had to
I
guess.
would say less than 10%.
Less than 10%. And what's your pitch to a driver to buy comp, whether it's a gas car, an EV car? Like, what's your pitch to them? Because why are 9 out of 10 people just taking this insane, it's a huge risk not to have comp and collision in New York City. What's your pitch to them to convince them to get comp and collision coverage?
Look, I'll be brutally honest. I have no pitch. I mean, it's your job, it's your career, and if you want to mess around with it and take the risk, that's on you. If you want to be the smarter one out of the bunch and purchase it, again, that's on you. It does exist. The Kingstone does underwrite it at a decent, fair price. They give you 8 or 9 installments. They have great reviews. They pay out claims. They have very good customer service. They fulfill their quotes. They pay out the amount that the car needs to be repaired. And there are products that exist and that offer decent prices to the drivers. And if you're in a career where you're taking your own risk, that's on you. If you want to cover that risk, we're here. We can quote you. They have deductibles starting from $500 to $2,500. Obviously, the higher the deductible, the lower the premium. The lower the deductible, the higher the premium. I mean, it's basic. But the reason why I guess a lot of these banks are not catching onto this is simply because when you purchase a new vehicle, you take the vehicle out on regular plates, you show regular insurance, and that's it. You're good. You're golden. You get the registration in the mail. You do a vehicle transfer. You put your old plates on the new car, and then nobody ever checks it. And again, that's a risk that you as a individual owner operator are willing to take. And again, I'm not here to say that's a smart risk or that's not a smart risk. I know drivers.
I think what you're saying is totally fair. You're just saying it's something to analyze and understand properly. Like as an example, if someone bought a $60,000 Highlander and they don't take comp and collision, that's just a massive risk to drive that car and not have comp and collision. And so as we wrap this up, and if you have any thoughts after this question, please share it. And then, we'll get into how people can reach you and all of that stuff.
Sure.
I'm sure these days, so right now, Next Century, correct me if I'm wrong, is basically open 7 days a week for renewal season right now.
We're here 9:30 a.m. till 9:30 p.m. Monday through Friday, and we're here from 10 a.m. till 7 p.m. Saturdays and Sundays.
Okay, so that sounds like a lot of fun. Yeah, I think I think one thing that hopefully one thing this discussion can help educate people about, like, why things are what they are, is that you are probably answering this question over and over again, and we already went over it at the top of the podcast, but maybe in a more sophisticated way. If a driver comes to you and his policy is up 10, 20, 30%, how do you, if instead of you repeating one of the goals of this as well is, instead of you having to say the same answer, 2,000-3,000 times, how are you summarizing that for drivers? Like, why is I know we went over it, but like kind of the 1 minute of it, like, why is it up?
Look, you come to us, you show us your policy, we run your motor vehicle record. We look at the discounts that are applicable to your policy. If there's something missing, we will let you know. And if you want to change to us because we found that error, you're more than welcome to. At the end of the day, all the brokers have the same carriers. Those carriers underwrite the same type of way. So you have to understand that these insurance policies have not risen in premium for the last, I'd probably say pre-COVID. Pre-COVID era. So they have not risen at all. And the amount of claims currently probably surpasses the amount of premium that they're collecting, which in other words means that the amount of money that the insurance carriers are collecting, they're paying out even more in claims. And again, everything in this country went up in price. I mean, your regular Geico policy, Progressive policy, it went up in price. So an individual that comes to us and says, I've been driving for 20 years, I have no points, no accidents. We try to do our best to explain to you that it's not rated just on you. It's rated across everybody. And the base price of insurance for these carriers went up simply because, again, they abide by New York State laws. New York State sees that they're underwater with premiums. The rates need to go up. If these insurance carriers go out of business, there's going to be nobody to insure them, and you're going to be paying $20,000-$30,000 a vehicle for an individual owner operator. So that's why it's hard to explain, because you're working for yourself, right? You don't care about anybody else. If you're an individual owner operator, you care about yourself, you care about feeding your family, you care about yourself. And in this aspect, you have to understand that the pool of drivers is also you. The claims are also you. So even though you've had no points, no accidents, There's somebody else that had $100,000 claim. There's somebody else that unintentionally hit a pedestrian, unintentionally got into a bike accident, and that's just causing a increase for everybody in this industry.
No, I think that's a very fair way to put it. And it's one of those things where it's like no one wants to hear it type of thing,
Yeah,
but it's kind of like I think one part of why we're doing these discussions is, you know, it's like, why are, in 1970 you could buy a hamburger for $1, but now the hamburger's $8. And like, if
exactly.
someone says like, explain that, it's like, okay, like it's a long story, but it like there's multiple reasons why that happened, and the cost to run a McDonald's in today versus 1970 is obviously drastically different with labor costs and all of that stuff. So as we wrap this up, I wanted to, how do people reach? We're going to provide the links and everything
Sure.
to what you say, and so, but it'd be nice to hear directly from you. So how do people reach out to you right now during renewal season? And if you could go over like where your physical locations are,
Of
and
course.
and your email address, or what's the best way to contact you?
Sure. So we're at 718 3rd Avenue, which is in Sunset Park, Brooklyn. I'm going to be honest with you. You don't need to come here to do anything. We have text messaging services. You shoot us a text message. One of our agents gets back to you with the documents needed. They work on your policy. They underwrite it. If there's an issue, they come to me. I make sure everything gets done in as fast as we possibly can. You can give us a call at 718-788-3585. You can visit our website. I'd like you to read our reviews, because I do think that our reviews speak for themselves, and not everybody's going to leave a review. Usually people leave reviews when they're upset with something. So when something's done in a good, fast, and professional way, I think that speaks for itself, and that's
Yeah.
what we do.
Yeah, exactly. And your website is nextcenturyinsurance.com.
That's us. Yep.
And we'll provide a link to all of this. And just from my angle, I think you're amongst one of the most legitimate. I personally have had a great experience. You and a few other brokers I classify as doing very clean business. And you didn't tell me to say this, but I know of other brokers who have actually taken premium from drivers and fleets, and then they actually don't pay the insurance company. There's like, sometimes you use brokers and it can get crazy. So, I think you've run an amazing shop for, over a decade. So people should, definitely know that, and we'll provide the links.
Thank you very much. And again, on top of what you just said, of course, that's an example of finding a bad one in a bunch. And again, that exists in every single area, that exists in every single business. And unfortunately, that's what happens. But
yeah,
hopefully it doesn't happen as much.
Yeah, no, I think this was really helpful, Gavriel. I think thanks for taking the time and doing this.
Thank
and
you.
hopefully
Thank you
you
for
can
having
share
me.
this. Yeah, no, and hopefully you can share this video, and with with people coming in, and it prevents people from because I know in this renewal season you're gonna have to keep on repeating stuff. But thanks a lot for your time. We'll put the your contact details in the description, and thanks a lot,
Sounds
Gavriel.
good. And thank you for providing this podcast. I think this is actually a very helpful tool for drivers who are driving, who want to get insight, that don't want to sit and read, or can't sit and read. You can just turn it on, listen to it. I've shared numerous podcasts that you've done with the group of individuals that buy insurance with me, and I hope that everybody look. We're all in this to do one thing. We cater to the drivers of New York, and it's a difficult market. It's a difficult industry. So I think the friendlier everybody is amongst each other, the healthier and better we'll all be.
Yeah, that's a great way to put it. That's actually the perfect way to end it. Is like, it doesn't have to be hostile. I think everybody's kind of going at other's throats. And so hopefully we'll do this again, because insurance is not a static market. And so until next time, we'll provide the detail. We'll provide the links to how to contact you. And thanks a lot, Gavriel.
Thank you very much. Have a good night. Thank you, Dawood.